Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. In today's outlook, we're starting the most important. The euro stood above its rivals on Friday after boasting its biggest one-day surge in nearly 7 years. As of course, the latest round of policy easing by the European Central Bank fell well short of market expectations. The EURUSD traded at 1.0910 after shooting up 3.1% overnight. That was its biggest one-day gain since March 2009. It has been as low as 1.0523, a level not seen since April. The battered greenback, however, looked to the closely watched U.S. nonfarm payrolls due later in the day for a bit of a relief, while, of course, November payrolls might not be as impressive as 271,000 new jobs created in October. Traders will expect a solid addition of 200,000 for the last month. Bruised dollar bulls, however, might draw a bit of a comfort from the fact that a December U.S. rate hike seems almost baked in. Now, barring any shocks in the payroll reports, also we're looking at the Federal Reserve Chair Yellen speaking before Congress Joint Economic Committee on a Thursday. She said the United States may be close to point at which we should be raising U.S. rates. Yellen also said the U.S. economy needs to add fewer than 100,000 jobs a month to cover new entrants to the workforce. Perhaps this was a remark setting an implicit floor for jobs growth that policymakers want to see. The euro's explosive rally on Thursday knocked the dollar index back to a one-month low of 97.591 from a 12.5-year peak of 100.5, scalded midweek on the contrast of hawkish comments from Yellen. The index shed 2.1% on Thursday, its worst performance since March 2009. It was last at 98.049. Heavy selling in the dollar against the euro saw the greenback lose ground against many of its peers, as well as versus the yen. It was down the bottom of 122.23, 123.77 range, and it last stood at 122.63 yen. Gold clung to overnight gains as well on Friday and looked set to snap a 6-week losing streak as slump in the dollar buoyed the metal above 2010 lows ahead of the key U.S. non-farm payroll data later in the session. The metal, however, rallied near 1% overnight after the European Central Bank monetary easing measures fell short of expectations of all traders and investors, boosting the euro and sending the dollar to its lowest in a month. Looking at the gold price, it was last steady at 1062.40 an ounce in late Asian trade and was ahead for 0.3% gain for the week. Investors stuck to the sidelines, however, with a focus now on the U.S. job report later on Friday to better gauge strength of economy and how it would impact the Federal Reserve's monetary policy. Also, we're looking at a bit of a robust U.S. payrolls release that could push the gold back into the defensive stance. For the dollar short-term, however, weakness will support the precious complex. Supports were seen for gold at mid-1040s and, of course, immediate resistance in the high 1060s. U.S. crude oil, however, is also on the focus on many investors and traders that extended early gains on Friday, buoyed by weaker dollar ahead of a closely watched OPEC meeting that is unlikely to alter the group's policy maintaining high output. U.S. crude was last trading up 21 cents at 41.29 per barrel in early Asian trade after settling up nearly 3% on Thursday. Crude prices have been slightly choppy ahead of the policy meeting of the Organization of Petroleum Exporting Countries that it's going to be in Vienna on Friday. Awaiting further information, we will keep you up to date. And of course, in today's calendar, the most important comes at 13:30 GMT for US labor force participation rate, unemployment rate, and the long-awaited non-farm payrolls. That's all for today. Stay ahead of all news. We'll keep you up to date. And of course, see you next time. Bye-bye.